So what's next for our property portfolio? Today I wanted to break down exactly where our portfolio is at the moment and what our future plans are for building our wealth and building our passive income. My name's Luke and I talk about all things real estate, renovating and financial freedom. If you could subscribe to the channel, that would really help me out, and let's jump into today's video. So Emily and I have been working hard over the last few years to build our property portfolio, and we're coming up to the $3 million mark. When we hit 1,000 subscribers, we actually plan on building a video that shows our entire portfolio and the ins and outs of the numbers. So if you'd like to see that video, make sure you subscribe. But today's video is going to be about the future. So what are our long-term plans and what are our options in terms of growing the cash flow and growing the growth in our property portfolio? And what do we actually want out of building our property portfolio? So let's start from where we are now and what our options are. At the moment, our portfolio is sitting around the $2.7 to $3 million mark, and we have some houses in great capital growth locations. They're located in the southeast Queensland market up here in Brisbane. We have some on the north and some on the south side of the river. So we're a little bit diversified in the Brisbane market, but we're also heavily and actively involved in Brisbane. We haven't actually diversified across multiple states and multiple locations at this point, but that is potential for us to do down the track. So what are the options that we have to potentially make as our next investment? Seeing as we've had some great growth in the Brisbane market, and Emily and I are going to be able to access equity to grow and leverage our way into a new asset and to grow the portfolio. So Emily and I have come up with 3 real options for us to make on our next property purchase. The first one is to buy an apartment block. Now, this would be a next big step for us because at the moment we've currently invested in all residential homes, and buying a unit block in its entirety would be a new adventure and a change for us. Now, we'd be looking for an apartment block that was maybe 3 to 5 units, probably ideally 4 units, and we'd been looking for it on a single title, so not on a strata title yet. So all that means is that the units aren't able to be sold separately, and you have to buy the block as one asset rather than separate assets for each unit. Now, in terms of buying that in a trust or buying that in personal names, that will be dependent on our tax situation. But the value we see in buying a 4-unit block is solid cash flow and value add potential through renovation. Em and I have done a fair few renovations now on our own places and helping other people out in their renovation journey. And what we've grown is our skill set to do cosmetic and basic renovations that don't require too much structural work. We have done some structural renovations as well, but largely cosmetic. And we'd be looking for a unit block that was tired, run down, had old kitchens, old bathrooms, and could potentially get some uplift, which will give us an increase in rent and an increase in value by renovating the units one at a time. So I'll be finding, a unit block with 4 units, for example, which are all fully tenanted. And when a tenant vacated, it would be to renovate that 1 unit and maybe 6 to 12 months later, renovate unit number 2 and 3 and 4. Now, the great thing about this strategy is it's a cash flow strategy with some capital growth potential as well, because you own the land under all of the units. And we'd be looking to make a purchase in the Brisbane market, potentially 3 to 10 kilometers from the CBD at a price point of $1 to $1.5 million. So that's a lot of information, but really the purchase of a unit block has lots of ins and outs. You're going to be dealing with more tenants, property managers, and we've done a detailed cash flow and a detailed analysis of option number 1, and it seems like potentially a good pick for us to move forward. Now, the real reason we like the unit block is because we can do that manufactured value, but it will also have higher cash flow. Because the land to the asset, the building, is going to be more like 50-50 rather than more like 70-30 in terms of land versus the building in our residential properties, the cash flow is actually going to be higher. And what that means is we can potentially derive passive income from running and operating and owning a unit block and having all those units tenanted. Now, multifamily real estate is a popular thing over in the US, but we haven't seen many Australian YouTubers or many people sharing that journey, so we thought that would make really interesting content as well, which is an added bonus. All right, that's probably enough about option number 1, so let's jump into option number 2. Now, option number 2 is to do a house and granny flat. Now, there's plenty of YouTubers that talk about this. I know if you're probably watching my videos, you probably watch the Pumped on Property Boys, and building a house and doing a granny flat is becoming a a more popular strategy. But what's happened is the local councils across Brisbane and Southeast Queensland have really cracked down on their rules of allowing you to buy and build a house and granny flat. There's only one LGA, local government area or council, that currently allows granny flats to be leased to a third party. So in all other local government areas around Brisbane, you've got to rent the house and granny flat to the same party, so on one lease. Now there is one council where you can rent both the house and granny flat to two separate parties. So basically like a subdivided block without having to subdivide. Now the great thing about a house and granny flat situation is that you can boost your income and you can buy and build the granny flat in the backyard. When you do that, you can get depreciation benefits from building the granny flat. You can structure it in a way so it's almost like a battle axe or a subdivided block. So you try and not disturb the front house. You can also renovate the front house to get more value out of doing that. And once the granny flat is completed after say 6 to 12 months, depending on how long that takes, then you're gonna have two assets, house and the granny flat. Now, once the house and granny flat is completed, you're gonna be receiving a higher yield and a higher return on your investment. So that's great cash flow and it will allow you to basically get money in your pocket after paying all the expenses on the property. Now, what do I think about option number 2, and what are the pros and cons really of doing a house and granny flat for us as the next option? Now, what I see is that you've got to buy in a inferior location when you're doing a house and granny flat, and you're also limiting your resale value if you ever needed to sell the property. So those are some cons about doing that option. But on the pro side, you're going to get that boosted cash flow, and if we plan to buy and hold for the long term, which we do, then having a house and granny flat, which you're going to hold for 10, 15, 20 years, and building quality and getting a good outcome and holding that for a long period of time, meant that you would receive that passive income and pay down your debt on the granny flat and still receive some money in your pocket at the end of the day. So weighing that up, option 2 might be a good one with the house and granny flat, but there is a third option that we're really excited about and maybe the goer for us. So that leads me to option number 3. And option number 3 is to open up our very own Airbnb somewhere along the coast. Now, we were looking at the sunny coast or the Gold Coast to make a property purchase, and we're looking within walking distance to the water. So ideally less than a kilometre from the house to the beach. Now this option is really more like running a business. It is running a business compared to, buying the block of units in option 1 and doing the house and granny flat in option 2, which are passive strategies relative to running an Airbnb. So running an Airbnb would be more like an active business and active income for ourselves. We need systems and processes in place to make sure that when people checked in, it went smoothly, that we had cleaners lined up and strategies in place for when things went wrong. The idea behind the Airbnb is to really boost the passive income and the cash flow from that property, and to get a much higher return by essentially running a short-term rental business than we would by doing just the standard, buy and hold passive income strategies from the apartment block and the house and granny flat. It's really trying to supercharge our passive income and our cash flow to potentially give us more life choices. Now, the reason we're looking at this is because we have built our buy and hold portfolio. We're comfortable with our portfolio as it stands around that $3 million mark at the moment, and we've got our foundations in place. So if you haven't got your foundations in place, that's where I wouldn't be, suggesting people look at Airbnb as an option, unless you have the right setup for it, you're already at the beach and you've got a granny flat or you've got a separate area that you can rent out, then of course it makes sense. But in terms of us taking this next step and looking at this as an option, we've got our foundation portfolio set out, and that's really why we're looking at these higher income strategies now to grow our portfolio. So Airbnb really excites Emily and I. We're excited to do all the renovation work to create a space that people would love to be in and hang out and holiday in. We'd also love to do some interior design, so furnishing it, setting up the kitchen with all the utensils and all the bits and pieces that are needed, getting the right couches and furniture to fill out a space and make it feel full but not too full. And all of that is something that we haven't done before. We're passionate about property and we're passionate about people, so we really think it would be a good fit for us in terms of growing and taking the next step in building our property portfolio. So at the moment, we're leaning towards option number 3. And of course, we'll document our next purchase here on the channel and explain the numbers to you and exactly why we made the decisions we made, and take you along for the ride in potentially renovating that next opportunity. So that's a breakdown of options 1, 2, and 3 and what we're looking at for our next purchase. We're planning on taking on that next step in the next 12 months, so make sure you subscribe to the channel if you're interested in seeing some of that content. Now, if you're looking to make a purchase up here in Southeast Queensland, I run a Brisbane-based buyers agency called Purpose Property, which helps people make purchases in the Southeast Queensland market. Now, we've been helping our clients at the moment get into this hot property market. So if you're looking for help and you want to chat with me, I run free strategy sessions, which you can book on our website, and the link's in the description down below. If not, make sure you subscribe to the channel for all the free content, and you can go out there and tackle property investing on your own. So I hope you found this video useful and interesting in working out what you might want to do in building your property portfolio. And like I said earlier, if you want to see an exact breakdown of our current property portfolio, give us a subscribe. We're trying to reach 1,000 subscribers this year, so we can't wait to share that video once we hit that milestone. So make sure you do that. If you want to see another video on real estate and financial freedom, click here to see that. See you in the next one. Peace.